the thing I want to say, if I could, just for a moment, is I know that it all kind of sounds overly complex, or it seems like it's just a lot to look at. But I want to stress to you guys that it's really not. That what you want to do is just, first of all, make sure you have enough real estate, as they say. I'm always quite amazed by people who trade sizable amounts of money and do it on one screen. Honestly, that always really amazes me. And I always try to tell them, I'm like, look, it's, technology is almost free nowadays. I mean, they're giving this stuff away. I mean, monitors, it's all crap. It doesn't take much of an investment. So if you can, at the very least, hook an extra screen to the laptop, which you don't even need an adapter for. You can go right into the side and put a dedicated screen up that has the 4 charts that I just showed you here. And spend about a month, if you can, watching these 4. And remember, you have your broad market chart already here. Right? And on the other screen, put everything else that you're used to watching. Watch your options, watch your chain on your SPX, whatever. Watch your stocks in your portfolio. Watch the NASDAQ, et cetera, et cetera. And then you tell me after a month, if this doesn't make you a better trader, that you will see that these things 100% correlate with what's happening on this screen is going to 100% correlate with what is happening on your other screens. There's no doubt about it. There is no holy grail in the markets, but I will tell you this. This is how the market works, quote unquote, under the hood. There is no doubt about this. The market absolutely positively cannot advance if there's more volume flowing into down stocks than up stocks, if there's more stocks declining than advancing, and if the ticks are not showing improving, if we don't have big, strong improvements in the NYSE tick where a huge number of more stocks, such as 750, 1,000, 1,200, are upticking rather than downticking. Think about it. The market itself, which is the S&P 500, which is 500 stocks, all of which trade on the New York Stock Exchange basically, or most of them, right? They are the market. So if they're not, quote unquote, doing anything, what is the market going to be doing, right? I mean, you have a lot of days where these market internals sit right on the zero line, and they do almost nothing. And the market sometimes doesn't sit on the zero, and the market will kind of act whippy, and it'll go up and down, right? And if you're in this position and you're collecting theta, okay, you really want to be watching this and not be scared out of your positions, because the days that the market is kind of just fooling everybody and going back and forth and not doing anything, right? Those are the days that you as a seller are getting paid. You are getting paid to do nothing on those days, and that's a great position to be in. But you have to have the tools, I think, to kind of know when you should be doing nothing and when it's time to make an adjustment. And when all of these 3 areas here are just hanging out around zero or within a relatively tight range, meaning like let's say that the market advances a little and the highest point that the advances decliners could get was plus 600, and then it kind of fell back down, and the ticks only made 2 spikes into the 1,000 area, and the breadth was, on a quick calculation, it was like it spiked up to, 2.7 to 1 positive, and then it went back down to close to parity, Well, it hasn't been acting that way lately because we're in kind of an expansion of volatility with, VIX around 50, but don't forget that the majority of days, the market really does just that. The majority of days, usually in a quote-unquote normal market, are not really large expansions of range. So in those days, you want to really kind of watch this closely and like I said, not be scared out of your positions and just say, okay, this market doesn't really have what it takes under the hood for me to be worrying about any sort of adjustment right now, And as far as the internals are concerned, I would just like to wrap up by saying, again, if there's no questions, it's fine. We can wrap it up. But it's really all just give me just 1 second. I just want to finish it. It's really all just in the watching. I just want to stress again, like I said before, is the most important thing is to get a feel for these screens, leave them up for a good amount of time, and see how these 3 things are acting in different market conditions. So on a day like Friday, how did these 3 things react? Was it confirming market action or not? Like, for instance, there was really a nice area to get short at noon on the ES, right? Right around noon on the ES on Friday, which is right in here, was really a nice area to get short. Now, you're probably asking yourself, okay, well, that's obvious looking at it, in hindsight, everything is clear. So tell us how were you able to get short there right on that candle using these tools, right? Well, excellent. Perfect. Well, look what was happening at 12 on the breadth. Where did the breadth rally to? the breath rallied right to the 0 line. So I'm going to give you another freebie here. When the breath moves to 0, the market will almost always turn. 90% of the time, the market will turn. If it's coming up from the downside, on a weekday, if the breath rallies to the 0 point, look to short intraday there. Look to initiate shorts when the breath moves from negative to 0. At the same time that the breath moved from negative to 0, what was the queen doing while the king was struggling to get to 0? The queen didn't do squat. The queen moved from a low of minus 762 to a high of minus 511. So the AD line didn't even get to the 0 line. And yet the ES rallied from a low here, right, of 673 to a high of 677. You had a 4-point run, which is not much in this environment. But anyway, market did advance, right? So obviously bears are looking to short because any bounce is shortable on a really negative day, right? So ADs didn't even move. Breath got to the 0 line. And then if you want, you can tie it in with the ticks and ask yourself, what was the high tick right here, which is exactly 12:15 p.m., and this is 12:15 p.m. Doot, 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 right there. See the bar I have highlighted on the ticks at 12:15? Okay, now let me ask you a question, guys. How come this tick high at 12:15 is lower than this one, and this one? Yet the market was going up, 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 up. You see what I'm saying? The market has moved up over that hour, yet the relationship here in the ticks is down. Less stocks are participating as the market is trying to get up there. That is a recipe for failure. I mean, that's screaming, short me, short me, short me. You know, so you see how it all ties in, kind of. That's how it all ties in. And then you have the bearish engulfment, which is the real signal to go short, because you need. I always believe that you can short at the trend line with a tight stop, but it's even better to have a nice fat reversal bar, so you have this bearish engulfment, and then get a short off either underneath it or somewhere in a 50% retracement of that big body, which would be right about there, which obviously we didn't get to. But even shorting underneath the candle was just fine. You would have made a nice clip on the ES of a few points, right? Even if you had just blown through the bottom of the candle, would have been just fine. And as you can see, it also tied in perfectly with a trend line break, right? I don't have my trend tool turned on, but notice that, look, this is a trend line going up right in here. I don't know why this trend tool doesn't work that well. I'm holding it. Anyway, I can't see. Sometimes I can't get these to turn on. But anyway, you can see I'm highlighting here as a trend line. So you can, so basically, I mean, that's it. It's all a question of basically just breaking it all down into the same time frames, matching them up. Notice they're all 15-minute candles, so they all match. And again, watching what the market is doing, and at the same time checking how my internals are acting. And as you can see, I've just shown to you very clearly how there's very, very strong clues to tell you whether or not moves are going to either reverse, sustain, etc., etc. So that's it. So